Hey guys, I just realized I've been talking to myself the last 20 minutes or so here on ARL TKAT and the SPY. I apologize. I'm not sure why my stream cut out. Let me make sure this works now for everybody. Let me make sure here. Let me go to post. Can you guys hear me? Awesome. Apologize. Sorry about that, guys. So we were talking about AACG. I just talked to myself literally for 20 minutes. That is hilarious. So we went through AACG. Great trade. There was a ton of opportunity to make some money on that ticker today. And then we saw a similar trade setup, ticker ARL. Hit my scanner up in here. So I want to kind of walk through what I saw, where I made the trade, where I exited the trade. So we look at the 5 minutes. We saw 19,000 shares come through for 10%, right? So that's a lot of range on no volume. This ticker was very thin all day long. Then we saw about another 8% gap up on 16,000 shares. So for me, I'm either thinking two things when I see this type of range and volume. There's no volume. And then I'm seeing range, though, of 20% on less than 30,000 shares. So I'm like, wow, Matt, what could this be if there was volume, right? That's how thin this is. And that's how these tickers like ORPH, SGOC, all TKAT, all these names previously that have ran 200, 300, 500, 1,000% in one day started with these little trickle sort of alerts or scanner hits, and then they went into powerful levels. But as I'm going to repeat myself 100 times throughout the next 20 minutes of this video, we're not in those markets right now. It's choppiness. Traders are locking their 10, 15% gains. As you can see, the price action has not been great in the past 5 to 7 trading sessions. So, be prepared to lock those profits. Do play safe. Use those comfortable stop losses to your likelihood, to your liking, and sort of play the risk off that. So where I entered here, I saw the 3-bar candles for 30%. Right out of the gates here, and I'm like, okay, we have another potential great setup here. This is a 1 mil float, so I knew it was going to be violent. But I never like to buy at the top in here. I like to wait for the profit taking maybe 15 minutes after the initial move. That's typically when I get my best purchase prices. So if we go back, right, to AACG, and we look at the 5-minute chart, we saw the huge rip, right? And then what happened? We got 3 profit taking candles for about 15%. And that is where we bought. We sold the initial rip, maybe scale out, and then we sell the final rip in here for the big 20, 30% move, right? But where do you want to buy? You want to buy those 3 red candles on the dip buy, which is what we call profit taking, or sort of a washout consolidation moment before the next rip up. There usually always gets a rip up, especially after the morning rip higher. There's always that second little leg up. Maybe the leg's 3%, maybe the leg's 8%, maybe the leg's 20%. You don't know, but that's all depending on the range of a stock. So we go back to ARL, right? And we see that sort of dip. I actually bought right in here. I bought very small, 5,000 shares right off of 1590. And then I was like, okay, it dumped down to 1530. I knew it was going to be volatile, so I didn't even really set a stop loss here because I went in with smaller size. For me, that smaller size, 5,000 shares. And then I bought another 2,000 shares on this dip down to the low 15s. I think I bought at 1520, 1530 zones. And then I saw a nice candle wick with no volume, really. I mean, 72,000 shares, which is higher than all these previous candles combined. So I was like, okay, that's a good sign. And the wick was 1590, which is basically higher than both these candles. So I'm like, okay, maybe we get a nice candle on the next push, next 5 minutes. All of a sudden, I alerted the buy in here for 15 minutes. You had an opportunity to buy in for 15 minutes in this zone, in the 15s. Then we said, boom, 12%. This made a move all the way to mid 17s, which is more than anyone who maybe tried to short up in here. Hit a high of 1850 on the first wick. Then we saw, boom, that was where the volume came in. We saw a halt right up in here in the 18s. All of a sudden, we're now up 20 to 30% here immediately off this buy. We're up 20% there on that. And then we get the final 30% push, 35% push, all the way into the 20s. My initial price target was 18, hence the 1850 candlestick lick up in here off the initial push. That was my initial price target, 18. Be safe. Maybe if you're greedy, lock at 18.50, scale some out. And if it breaks 18.50, target 2022. Right in here was off by $1.50. But as I mentioned, guys, in other bull markets, this is a perfect recipe for a rip, dip buy if you missed the rip, then catch the initial rip higher. Then we see maybe some dipping into the 17s again, and then maybe a rip, boom, to 22, 25 zones. That is where I thought this ticker may go, but as I mentioned, I'm going to repeat myself again and again. We are not in those type of markets. So if you start to see that price action come back, and I can sort of feel it through the screens, I wouldn't lock profits in here. I would maybe scale out half, let the other half ride, and maybe sell the other half 22 to 23, 24 range. Now it would be a full maybe 50, 70% move, right? But no, I'm not going to be greedy in these markets. Traders are locking their 10, 12%. So what I'm going to do is I'm going to lock my 30% gain. So I locked 3,500 shares out of my 7,000 right at 20 flat, literally 20 on the dot. It ran at 20.38. I still felt like I got a good sell order in there because it was violent up here. And then we saw not a kill candle, but a big down candle here, which was lower than all these shares combined. But still, it wasn't the best action I liked. So I said, okay, maybe I should sell, keep the other half, maybe put a tighter stop loss up in this sort of 1790 zone. And so I put a 1790 right under the 18 because I thought it was actually going to bounce off this lick here at 18 and bounce into 20, 21, 22. And I was going to sell the next leg higher, right? Because we saw AACG, right? It went up, down, trickle, 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 boom. And that's what I thought this was going to do. But unfortunately, as I mentioned, these markets have sort of died out. Traders took the profits, never caught the hype. And then once it sort of broke this plane in here, this sort of 16 plane, it kind of just died down back into the 14s. Got a nice little, tiny little pop, 13% pop, back into the 14s here. Then sort of just trickled out into close to the 13s. But, this is a low floater. It could see 17, 18, 20s again. And why I say that is if you go and look at the daily chart, we saw a break of 14 with a high of 20 today. Another break was 14 here. So it blew through that, which probably saw some shorts auto cover through brokerages, popping through that 50% move there. If we go back all the way back to 2020 or 2019, 2 years ago, we saw heavy resistance in the 17s, which it broke through that today, which was nice to see. As well as even more heavier resistance here in the 18 to 21s. So why did I give my price target for 18? If it breaks 18, target 20 to 22. Why? Because of this range right in here. That's where I figured the ticker would go and sort of stop there unless crazy volume came in and it really blew through 21s, which it didn't today. It had a high of 20. So that's why I gave the range of 18 first for your 15% move, and then your 30 to 50% move, target 20 to 22. I hope my price targets are helpful intraday. I really try and keep them very conservative. I'm not going to be one of those guys who say, buy at 15, I'm targeting 30. That's unrealistic. 100% in one day is unrealistic. Have we got those before and quite consistently? Of course. We're going to get those from time and time again. That's why people love the alerts. That's why people are in the server. They want to see these quick movers. They want to see the best entries, best exit they possibly can. And I'm here to help guide you on what I'm doing, what I'm seeing on the ticker, and how I'm seeing the reads going from the price action, right? So, I didn't think this would hit 25.30 today, but I did think it was going to hit 20 to 22, and we got that zone. And if real volume came in, I thought we were probably going to hit 25.30. But as I mentioned, guys, we're not in those markets. So it sort of stopped out in that zone, 18s. That's kind of where it kind of trickled down. So it's just in a top watch. There was no news, just a 1 mil floater with some semi-good volume. And that was ticker ARL today. So bought in here in about 1590, 1580 average, sold half at 20, and sold the rest, stopped out at 1790. I think my shares went through around 1770, 1780. So that was a nice trade for me. Probably made a little over 18 to 20 grand on that print. Nice print. Then we're going to talk through ticker TKAT. And as many know, this name, I'm sure I've played it probably 10 times this year. I've probably made 6 figures on it in total and could have probably made way more. This ticker, if we look at the daily chart, guys, I call this the mothership of NFTs. This ticker sort of, China name started the NFT. It's an sort of a rare arts play. We saw back in, what was this? Was this 2020? No, back in March, not too long ago. Back in March, we saw this ticker rip. I mean, this went 280%, 33%, another 65%. This is all $4, all the way to a high of 74. I remember we sort of bought this thing at what, 8? I think 8 or 9. And this thing went all the way to 74. So you're going to make a 700% profit move in less than 3 days. I remember we played that. That was a super fun trade. That was when the NFT sector was crazy hot, all up in here. And then we saw volume. Then we saw a nice cap bounce. This was another huge swing trade for the team. We alerted right in here, 18, 19, 20. And this thing ripped all the way to 40. Almost 100% move in a 1, 2, 3, 4, 5, 6, 7, 8 day trading period. That was another great swing trade. We played this now twice in 2021. And then it sort of died down. It broke this trend line. I knew it was going to go further down. After it broke down under 17, shorts came in. Volume totally disappeared. Now we're starting to see 300 shares a day. I mean, look, shorts then just started to hammer this. 5, 10, 7, 12, 4, 14, 6, 15. I mean, this is 13. I mean, what do we see? 100% down move from, 100% down move from the 18, 19s all the way to 7s, even more than that. So we finally got a bounce out of nowhere. 33 million shares came through today. Hit my scanner this morning all the way up in here out of the gates, 955. Excuse me. We saw a 13% candle and a nice lick up into the 8s. Then we saw some deep profit taking, and the bottom of this lick hit exactly where the candle started. So I'm like, oof, I don't want to touch this today. This looks like a mess. So I stopped watching it. Then it sort of licked higher here and ripped higher here to the 8s of all HOD again. So now it's up like 12, 15, 17%. So I'm like, okay, maybe it comes back. So I said, you know what? It dumped right again. I bought this dip right in here. And I bought high. So this went all the way up to 824 again. I actually bought high, guys. I bought this at like $7.90, $8. I bought 20 to 25,000 shares right at ask at $8. I bought above ask in here, and then it kept going down. So I'm like, oh, I didn't get the good dip. I knew it wasn't the best entry, but I felt like I just wanted my position in case it ripped to 840s. And so it went lower. I actually put my stop at the bottom of this tick here, which is at 749, which wouldn't have been a fun. It would have been about, what is that, a 10? It would have been about, I don't know, 5, 6, 7K loss. Would have been nice. And then we saw a nice candle rip back to 8. So I'm like, okay, I feel solid. I alerted the dip right in here. It actually wasn't the best entry. Your best entry was probably 730s. But as I mentioned, I stopped watching this name after because I was trading ARL. I traded TKAT after ARL, basically right around the same time. So I alerted this around $8. I said, look for 830. I think I said look for 830. If it breaks 830, target 9. If 920 breaks, look for 9920. If 920 breaks, target 10s. So we saw this then rip 3, 5, 8%. So, guys, that's a 10, 12% move right in here and at a high of about 15%. And it hit 920. Look at the top of that lick. 920 to the penny, I said. To the penny. It's not magic. 920 right to 920. Then we saw some profit taking, right? Then we see higher consolidation here at around $8. Which is sort of where we bought, right? The initial best buy was 740. Now it's consolidating 10% higher than where it was, right? Our entry, which is great. So if you missed the sell for 12, 15%, no problem. You might be sort of kicking yourself for not selling for 10, 12%, right? Because it sort of died out. Then it consolidated and we ripped to a new high. We ripped to right inside, same place, right into 920 again. And that was your second opportunity to sell for 10, 15%. So you had a second opportunity to sell here, right? Then it sort of died down a bit into close, got a little bounce back to 840s, not much. As I mentioned, we're not in those supernova markets. This was running off that YVR play. People were trading that, not sure why. Not sure how that had so much volume and moves today. I knew it wasn't going to hold. That's why I didn't alert it, and that's why I didn't play it. And so, I played this for that, and I sold the rip in here. It was a great trade for me. I think a little over 12 grand I made on that ticker name. So that was a nice print. And then, so really, guys, if you look back, right, we look at AACG. These were all stress-free A+ setups. And what I mean by A+ setup for me. this is what I saw. We saw the rips out of the gates. Typically when things rip out of the gates, you get a nice profit taking for people that have held the stock for a while or day traders that are holding it, right? And then we saw a new rip. We see new rips. People sell that dip. And then what happens is we see a rip, dip, dip, consolidate for a lot of time, then maybe rip to new highs, right? So that's what we saw. Rip, dip, new lows, rip, dip, higher lows, rip to new highs, right? AACG. What's the same pattern on ARL? Little more thin, but same trend line. Rip, dip, buy the dip. I call this a 3 red candle dip. Buy the dip on the 5 minutes, right? Keep in mind, rip to new highs, sell the rip, maybe scale out half, maybe rips here, dips here. In a bull market, we get a dip here, rip to new highs there, right? Makes sense, same trend line. What happened on TKAT? I'll bet $1 million that it looks like the same chart. Oh, looks like I won. Rip, dip, buy the dip in here, alert the dip buy, sell the rip. You could scale out half here for 5-10%. Nope, scale out half, boom, sell the rip for the full 10, 15, 20% move, right? Missed that, higher consolidation, new dip buyers come in, consolidate, rip to new highs. In a bull market, this rips to the 10s, both my price target gets hit for 20, 30%, right? So guys, don't make trading too complicated. Like if you don't know where you're buying and exiting, you shouldn't be trading, because some of these day trades, you shouldn't just be closing your eyes and buying. A lot of them are pretty simple, easy reads. Don't FOMO buy up in here. Wait for your move. Wait for your washout dip buy on a strong stock. Like you don't want to be buying down in here on these, because it already it's breaking down. It looks like there's more downside. So you don't want to be buying in here unless you plan on like swinging maybe from here and maybe selling back in the eights again. If you're okay with that. From a day trade perspective, you want to catch it while volume's at high and there's strong momentum, right? Which is typically some of the mornings or some of the late afternoons. If something's been consolidating all day. But for me, guys, I don't want to ever chase a stock, because there's always going to be a next play. There's always a next play. Always. So I don't want to chase stocks. So that was ticker TKAT. I made about 12 grand on that print. And then really, guys, that's it for my 3 trades for today. I was done by about 1 p.m. I made my 36 grand and I'm done. I was sort of done for the day. And I've been having a couple big red days from oversizing in these markets the last couple weeks. So I don't really want to give more back. I want to get back to my smaller size, my 10, 20, 30K hit, base hit days. That's what I want to get back to, making my 10, 20, 30K a day. I don't need to be making my 50, 100K a day. Unless the markets are hot, I'll start to scale in a little bit more. But I want to go back to the base hits and really keeping it to these A+ easy reads. Last thing I'm going to talk about is our good old SPY friend. Global markets, let's talk about the SPY S&P 500 index here. I mean, guys, we've seen a crazy move. Let's just talk through the weekly chart, for example, right? We saw a low of 218 during COVID. That was the big panic. We saw a monster drop, right? And then since then, we've been up 100%, guys. That's in over about a year and about 1 quarter of time that we've seen 100% move. Guys, that is a huge move. If we look at the daily chart, for full disclosure, I'm holding my not full disclosure, but everyone knows I update my long positions. I have I bought 100 contracts at strike of 425 for mid-December. 100 put contracts, strike price 425. So I am looking for downside. I'm up about 3% on those contracts of end of day close today. And I am looking for more downside into Q4. With some maybe inflation, interest rate fears. Fed's been pretty honest with what's going on. 2022, we might start to see some downside here. But in terms of downside, why I chose 425, I like that because I think it's right in this zone on the daily chart. We might see a little breakdown. 27 here prints me about 20 to 30% in here. Anything more than that, if I could get it down, we could see the SPY maybe correct to about 415. That'd be a nice 40 to 60, probably maybe even 70% print on those contracts. They're sort of low risk for me. I have a 10% stop loss on those if it hits about 440 on the SPY. And then I'll try and buy the 445, 450 breakout, and I'll look to grab puts on the highs. But I do see some downside in Q4. I think maybe we finish out strong in July, maybe 440s. I don't know though. Today wasn't a great day. Some heavy selling today and yesterday. So we could see some downside back into the maybe 430, 428 zones. Where I want to go long in my Roth IRA, will I ever get it? I don't know. 405 is where I'd like to take my real starters. Big names. I want to, love to maybe grab a Tesla, a Shopify, an Amazon on a 10, 15% market dip. I'd love to get sort of those nice 10, 20 washout percentages on those names. Will I ever get them? I don't know, but I want to, that's where I'd like to go long for a couple years out. And then really where I'd like to go with more size is in this zone. And then load the boat for me for longs would be in this SPY 370 to 380 zone. That might never come. It might come in 2022, 2023, but that's where I would go heavier with some of my Roth IRA, some of my sizable accounts and positions. I'd like to go long in that zone for 2, 3, 4, 5 years out, maybe even a 10-year fix off of in here. And as I mentioned, I can only wish to get those entries down here on an index standpoint. Even buying an index alone down here would be a nice buy. But my starter would be right in here around 405. Who knows if we even get that in 2021. I do think we are going to get a 5 to 7% pullback. That's obviously my opinion, of course. So I do think we will see 415 to 420 again. And that'd be a nice starter long to maybe close out the year. But that's all. That's why I have my puts for that downside. I'd like to make some money on the quick downside because I do think we've had a nice overextended move from down pre-COVID. I mean, guys, that's a huge move, right? So even if we get a little profit taking, we could see 415. Major profit taking, we see, that 400 mark again, maybe a bounce back to 430. So that's my SPY analysis. That's my global market analysis. As mentioned, guys, green day, 36,000 on those 3 trades. Guys, I don't want to be chasing setups. I want to be downsizing in these markets. It's summer months. Liquidity is not the best, although I will say from previous years during the summer, liquidity is better than it has been. So that's always great to see. I love to see that kind of stuff. I love to see some movers. I am expecting a wonderful September, October, December, sort of in terms of liquidity and sort of some great moves. Large funds will be back from vacation. Traders will be back from vacations. Typically, things start to pick up in terms of volume in September, October, December. So that's where I'll be looking to sort of really pick up some of the slack and close out the year strong. But yeah, guys, if you love this content, we have thousands of members, paying members in Discord. Please come join us. See the link in my YouTube. There's tons of content in there. If you're looking for options, we have a great options team. Harmony Trades runs that sector. He hits 50, 100% contract movers intraday. The guy's a beast. You should definitely come check out a lot of his content. He does it full time. Down below. So definitely come check him out. Come check out the server. Any questions or feedback, feel free to comment right now or just comment in the Discord main trading room floor. I'll try and check it out. But I hope these videos are helping, guys. See some of these patterns because it's a lot of this is really repetition. It comes down to repetition. And when you can get your entries and exits right, guys, there is no better feeling than having a green day. Whether it's 1% green day, 10% on your account green day, 100% on your account green day, or whether it's just making $10 on your first ever trade as a trader, like it feels good when you predict something before something happens, right? And that's what we as traders end goal is to do. Predict a move before it happens, whether that's upside, downside, sideways, whatever it may be. If you can predict a move before that happens on a specific ticker, stock, or index, like that is when you're going to start seeing consistency in your profits. So I highly suggest studying a lot of these charts and breakout patterns because they all do help. They obviously help me. I've seen these for a couple years now. Like it comes natural to me. A lot of these plays. So that's why you see me alert real time, like what I'm seeing, what my read is. Because I want to make sure you guys can see that stuff in real time too. So hopefully all this helps. Please drop me some comments, some likes, feedback. Love it all. Any criticism or anything that you'd like to see more of, just drop it below, guys. But cheers. Spud Zone out. Hope to see some of the new faces in the Discord. It's been a great week. So a lot of new traders are joining. So happy to see you all come in and get some great deal of knowledge here. Awesome, guys. Let's close out strong. Tomorrow I'll probably trade the morning, find a couple good A+ setups, and then I'll probably close out around noon again and go out for sort of a long summer weekend. August, July, end of July, all of August is typically slower. This is sort of the only time traders and large money index funds, sort of financial sector as a whole, sort of is the only time they could get off after working all year. So do expect some slow and steady sideways action for maybe the month of August. So awesome, guys. See you guys soon. See you guys tomorrow. And